Global Equities. Private Label Tipping Point. Simeon Gutman, CFA Equity Analyst, Morgan Stanley Company, LLC. We believe the private label grocery market is on the cusp of a supercycle. This development is a byproduct of COVID era changes that are altering the way consumers shop and how retailers invest. At the same time, it more profoundly reflects the rise of the largest grocery retailers. These mega platforms are taking an increasing amount of consumer wallet share while innovating more than ever. Investors appear to view private label penetration as a slow, gradual, and ongoing process. Retailers have benefited modestly from private label expansion thus far. Consumer packaged goods companies have navigated this dynamic relatively well in the household products and beverage categories, but less so with food. That said, our work challenges the prevailing assumptions around penetration. We estimate that the rate of change in private label growth will accelerate faster over the next few years, reaching 40% by 2030. Market penetration. Generally speaking, private label penetration in North America trails other parts of the world, with Western Europe leading. Western Europe's private label share of global retail is estimated to be about 36%, according to Nielsen. This can be explained by a variety of factors, such as differences in discounter penetration levels, cultural preferences, and the history of private labels. However, the broader and unifying long-term trends point to private label products over time offering competitive value with improved quality. We estimate that private label sales can reach some $462 billion by the end of the decade. This assumes that penetration increases 60 basis points per year, implying a year-over-year compound annual growth rate, CAGR, in the mid-single digits versus approximately 4.0% live prior to COVID. National brand sales are projected to grow roughly 2.2% on average over the same time, which is below the pre-COVID trend of approximately 3.1%. We expect private label growth to accelerate off of historical trends for several reasons. Spending shift. First, consumers have shifted their spending patterns toward a focus on value and affordability due to a challenging macro environment. As a result, private label dollars have increased among all retail channels. Adoption of private label appears to be broad-based across income cohorts, with particular strength among high-income consumers. Our August 2024 AlphaWise Consumer Pulse survey of 2,000 U.S. consumers shows that 67%, 70% of respondents in the $150,000 plus income group are often or always willing to try new private label products. Think private label products usually provide good value. We believe private label growth can continue to accelerate from here as concerns around inflation and grocery prices remain top of mind for most consumers. In response to changing consumer behavior, retailers are reinventing the notion that private label products only exist as alternatives to current brand name products. Instead, retailers are pushing innovation in three ways: by introducing products that do not have a brand name counterpart or that are new to their existing offerings, by rebranding existing private label brands to appeal to younger shoppers, and by expanding private label into higher margin categories. Through these methods, retailers can ultimately increase their private label penetration and drive greater brand awareness to ideally capture more market share. New alternatives. Retailers are leveraging their private label brands to create better-for-you alternatives to national branded products. This addresses the gap in the market for healthier options, but at an affordable price point, and especially when consumers are focused on value. Separately, retailers are expanding their private label lines into more premium categories. These often emphasize higher quality ingredients that are artisanal and feature restaurant-inspired recipes, which can become more profitable for grocers. We think these two trends will help drive greater share of wallet, especially as consumers are shifting spending toward food at home versus food away from home. On average, we estimate that an increase in total private label penetration for the retailers in our coverage universe could add up to 2% of incremental earnings per share. Moreover, as retailers utilize private label brands to improve their cost structures, they get the opportunity to negotiate with their name, brand partners, and drive down supplier cost. Stores with higher private label exposure are well positioned. In 2023, club and discount stores took market share from mass and conventional grocers as consumers became more value-oriented. This could be due to the fact that club channels also skew higher in private label penetration, offering consumers more value than conventional formats. Looking forward, we believe retailers with greater private label exposure are best positioned during this next stage in private label growth.